a 2-year ban. And then, for any of those projects to get going from there, it's, a number of years from going forward.
So it basically, like, the bottom line here is that they put the law into effect so that more Canadians would be able to buy homes, but now that's not happening because there's not enough money coming into the new build projects by Canadians.
You're listening to the Ottawa Real Estate Podcast with your hosts, Paul Stevenson, David Warren, and Greg Campbell. Let's see what's going on in the world of real estate today.
Hey, what's going on, gentlemen? How are we doing? We're back.
What it do?
We're back. Kansas City Chiefs are Super Bowl champions, and winter's almost done. Those are our headlines for the morning. Welcome back to the Ottawa Real Estate Podcast. My name is Paul Stevenson. I'm joined, as always, by Greg Campbell and Mr. David Warren.
Hey,
gentlemen, how we doing?
Fantastic.
Good.
Doing fantastic, buddy.
I must say, what a great game last night. I'm going to touch on the Super Bowl briefly, but damn good game. Unfortunately, it came down to like the dying seconds of a holding penalty, but great game overall.
Yeah, it was good. I agree. I enjoyed it. I had some family over, and did the old pizza and wings. It was great, exciting game. Good company, good game, good food. I mean, what more can you ask for? That's all you want. As long as it's not a blowout by 40 points.
And if you put your money on the over, congratulations.
You're a winner.
Free money. Free money Mondays. So lots of news in the headlines this week. I know there's a few things happening, but let's talk about what we're seeing before we get into that. What's Ottawa looking like right now, gentlemen? What are you seeing out there in the Wild West?
We're seeing explosions in the Wild West.
The housing market exploding in East End, literally.
It looks like that's the hot topic for this morning anyways, because I think everybody knows we record this on Monday morning, and big explosion in Orleans in one of the newer developments. Doesn't look like anyone's been hurt.
No injuries, thankfully. But I think you mentioned a Minto Developments, 10th line.
It would either be Minto or Mattamy, but I have a feeling it's Minto just by what I'm looking at here. So the road's blocked off on 10th line between Decatur and Wall Road, which is part of those new communities. So wild gas leak. There's a clip on Twitter somewhere from someone's Ring door cam, and it's like looks like someone just dropped a bomb on a house. Wow. It's crazy. Yeah. Anyways,
so what to those homeowners?
Doesn't seem like anyone's
people
hurt.
That are locked in. So that was a new build development. The people that own those 7 or 8 units, what happens now? I guess insurance steps in, and
I guess they haven't closed
much to build a home.
Yeah. I mean, they will. I mean, in a case like that, they are vacant homes still under construction. So I guess the builder will have construction. Right? Yeah, they'll have their construction insurance on it, and they'll have to get inspected and rebuilt and insured. So any of those people that were waiting on those, probably for a closing in the spring or fall, we'll have to wait another year or two, unfortunately. But
that's crazy though. Imagine buying a house and you're about to move in and it explodes, like four homes leveled, and then it's like, do you really want to move into a new home built on that same piece of land? Is it some type of curse?
So there was, when the tornado hit Ottawa a couple of years ago, it wasn't one of my clients, but one of the houses in the Nepean that got hit by the tornado actually had a sale agreement on it. So it was under contract to be purchased by somebody else, and the whole second story ripped off.
Wow.
And they were kind of in limbo. What the heck? And it was closing within days. So the sellers already under contract to buy something else, and then these buyers planning on moving in the next couple of days, and that's So at least in the case like this, it's just the builder that owns it. It's not the individual, and construction insurance will kick in. That was definitely a mess because they had to wait for insurance, and that canceled, or that purchase agreement was put off. And anyways, that was that one was wild. Yeah.
So they weren't looking for a bungalow, is what you're saying?
No. They weren't looking to downsize.
No. Freshly renovated bungalow.
It's the old top lopped off. Yeah.
What else do we have here? You want to get into that thing that you brought up, Dave?
Yeah. So I thought this was kind of talking about houses under construction, kind of an interesting kind of
very interesting.
Yeah. Kind of I'm lost. I'm at a loss for words right now. Anyways, the foreign buyer ban that came into effect for January 1st, banning any foreign non-Canadians from purchasing a home in Canada, has language in the act that actually restricts the purchase of vacant land that is zoned residential by any company with ownership over 3%. So it's actually having adverse effects for, especially in Toronto, where there is such a massive need for development, and the government trying to double the pace of new home construction to 400,000 units annually over the next 10 years. This is actually having an adverse effect because most of the large developers in Toronto either pair up with developers from this US or other countries, or that they get financing from some of these foreign companies as well for the development of these projects, because they obviously are large scale projects. So it's actually putting a halt to a lot of plans for these companies that are wanting to develop properties in some of these major cities. So it's kind of having an adverse effect, this act, for the increase of supply. And it's talking about, it's interviewing, it's a Bloomberg article interviewing a number of Toronto-based lawyers and developers, saying that the 3% level of ownership is rather absurd. That it's kind of just such a low figure that it's really restricting, going to restrict supply, and when this was an unintentional, I think it was an unintentional effects, to the act, but it's certainly going to have a longstanding effect on supply over the next several years, because it's a 2-year ban, and then for any of those projects to get going from there, it's a number of years from going forward.
So it basically, like, the bottom line here is that they put the law into effect so that more Canadians would be able to buy homes, but now that's not happening because there's not enough money coming into the new build projects by Canadians to buy homes.
or that
similar,
large, for a lot of that. Some of these builds are hundreds of millions, and so there's only, Canada's a small country, yes, a very wealthy country, but a small country at that, and so a lot of these large scale developments pair up with foreign, get financing from, foreign countries, again, like the US or Europe and Australia and things like that, or Asia, and then for financing and for developers as well. So it's going to restrict there. I think, it's obviously unintentional, but, having that 3% there, I would hope that if this becomes a serious issue, or that there is not the funding locally for these developments, that they do, kind of maybe change that wording in the act from that 3% foreign ownership and increase that, so that we aren't behind the, continually behind the 8 ball of new supply.
Well, and it's interesting that you said, that is kind of collapsing. And I was also reading this morning about that most investors across Canada, it did a percentage amount of what they own on properties, and then what they own on properties built in 2016 to 2000, like till now, and it's a big difference. So it seems like generally investors are buying newer properties. It seems like in this review, it was more along the lines that condos, like apartments, were still the biggest one, the biggest product for investors, and the numbers are pretty big, like. So it's kind of saying like now that if the investors are buying the new properties, what's happening to the old properties where people were going in and doing the renos and maybe flipping them, making them better for resale or making them better for a new tenant? Does that mean that the little things like the flippers tax is actually starting? Like, is it working, or are some people just being like, I'm not even going to bother with that anymore, I'm only going to invest in newer developments, and just change their whole model? I don't know. It's an interesting article to read. It's in Better Dwelling.
Yeah, I mean, there's also the kind of the rental laws as well for what you can increase for builds that are 2018 or newer, right? There's the rent control differences there. So potentially that has an impact with what some of these investors are looking for as well, right? Where they can, they're not as restricted to just the CPI. And I would imagine a lot of those, like for Better Dwelling, it's for condos being very popular, I would imagine it's probably, my guess is, pretty Toronto or Vancouver focused. Kind of, I find a lot of these articles are
I think
in a lot of those bigger cities,
always,
right? Yeah. But I do think that with the with where prices are at, with where interest rates are at for investors, certainly looking at the newer construction is more of interest because of the kind of that lack of rent, kind of those laws around rent control for 2018 or newer, not having to worry about renovations or anything like that. When for anything older, you're kind of getting into maybe a day-to-day HVAC system or roof or whatever it may be, where you not only have these higher carrying costs of the property because of where interest rates are at, but then also the expected overhead for maintenance and repairs as opposed to new product. But I
agree. Anyways, it's something else here. And we're also looking at Canadian seniors are increasing their reverse mortgage debt at a rapid rate. I think, Dave, you had some better information than I do about that because you're in that business. What do you have to say about it?
Yeah, I think it, for those out there, I think it was I think it was a record year last year of I think Home Equity Bank, who does the CHIP reverse mortgages, they're the most popular. I think they funded over $1 billion in reverse mortgages. Typically, and this is for listeners that have maybe elder parents, kind of chat with them, look into it. A lot of people, obviously, their retirement is based on the equity in their home. And the only way of unlocking that is through sale or a refinance. The unfortunate thing right now is when you've got somebody who is retired, maybe they're on only CPP and OAS. So qualifying with a conventional bank is extremely tough because they won't do it just based on equity. Or they have a pension with the government or with some other company. But it's still not enough with where interest rates are at for qualifying, that, interest rates are elevated. Qualifying for a traditional mortgage with your, major bank or what have you is a lot trickier, especially with limited income. And so for that aging population that's been historically kind of banking on their equity to live and kind of get them through retirement, they're not able to unlock it. And so they're having to go the reverse mortgage route, which, for those of you who don't know, look at qualify based on age and equity in the home. So there's a metric based on your age of how high of a loan to value you can go on your home without worrying about any qualifying. Because what they do is you can have it set up where either you're not making any payment on the amount that you withdrew, but the interest rates are higher than what your traditional mortgage would be. However, they've got a couple different components. You can either make a regular payment on the interest so that it's not eating away any additional equity in the property, or you can have the monthly payments just compounding and kind of eating away, if you will, the equity. So let's say maybe you get a reverse mortgage up to 50% and you say, you know what, I've got 50% equity, I'm not going to worry about making any payments, I'm just going to pull this money out and it's just going to tack on those payments onto that 50%, so that maybe down the road when they go to sell, maybe it's now at 60 or 65% loan to value, that loan amount. You can set it up where it's also, or a monthly payment like a pension, and so you're paying less interest. It's only on money that you're drawing. So there are different ways. It is a really good product for those that aren't able to qualify in other traditional means, or looking for a drip, kind of that as if they're on a pension. But it is, right now, this past year did see an increase in use of reverse mortgages just because of the qualifying. So for those of you, needless to say, those of you that have maybe parents that are in that baby boomer stage, that they, focused on paying down their mortgage over the last 20 years, 30 years in their home, and they've been planning on using it for retirement. Just, I think having those conversations with your parents as well, and having, being, open as far as what that plan in retirement is, or accessing that, and, being involved in that conversation of whether that reverse mortgage is best for them, or if there are other avenues, maybe, speak to a mortgage professional to see if there are other avenues of tapping into that equity where maybe you can get that interest rate lower and not kind of in that higher reverse mortgage rate realm.
The other positive of the reverse mortgage too is that when you're taking that money, it's your own equity, so it is tax free. Like you're not paying taxes on those monthly payments, and it also doesn't impact your government benefits. So if you have your OAS or whatever, it doesn't impact that in any way. So a lot of people, I think, have that. At least from the conversations I've had about these in the past, people are concerned like, oh, well, if I take income in another way, I'm going to be losing my benefits, but it doesn't impact that either. So there are a lot of benefits, as Dave mentioned, to going that route.
Yeah, I think it's just...
sorry, go ahead, Dave.
Oh, I was just going to say, I think it's just, important to have open dialogue, with those family members or parents or whatever it may be that are maybe considering it. Because I know from the stats from talking with a home equity bank who has that CHIP mortgage, I think it's something like 90% of their clients, they actually reach out directly to them, and they're not going through, it's not family. They're reaching out, it's just phone or email inquiries, and they're not wanting to involve their family in a conversation, which is unfortunate because there might be other avenues or anything like that, or just, I think it's important to have that open dialogue with that planning, because it can be a very good product, but it's just kind of, to Paul's point, there are tax advantages, there are other aspects to it. It's unlike the U.S. product. When people hear reverse mortgage, they think of all the articles back in the day of in the U.S. where you hit 100% loan to value, let's say, that they're going to take your home out from underneath you. In Canada, that's not the case. You can be at 100, you could live to 120 years old and be at 120% loan to value, and they still cannot take your home. It's, really that's on the bank. That's why they have that age loan to value matrix, to limit, the max LTV they'll give based on age. But that's solely because they're, if you're compounding the payments onto the principal, that, they have to manage their risk as well, but they can't take that home out from underneath you.
That's great info, guys. I think, what I'm getting out of this episode is maybe this is the headline: money doesn't care. Money just doesn't care. So you better learn how to work with it, and you better figure it out, because it does not care about you. And it can, it causes a lot of problems for a lot of people. So you better, just get interested in learning more about it and how to make it work for you.
Well, and just understanding it, like I know we're not, none of us are economists, but obviously being in the industry where we kind of see the trends a little more than most people probably, as far as interest rates and home prices, and at least relating to real estate. And there are a lot of advantages even right now of, like, with the market being, dipped, you could say, a little dipped, who doesn't love, I don't know if anyone used to go to DQ, but the dipped cone. I mean, that's my favorite, chocolate dipped cone.
Dipped cone.
There are benefits.
Wow.
There are benefits to going dipped, No, but
let's get dipped.
But yeah. But in a dip market, I mean, there are a lot of advantages to buying now, and I think that's kind of what we're saying, is that understanding, or at least what I'm taking from this, understanding even at a very high level, the ebbs and flows of the economy does open doors for opportunities as well. And for us right now, seeing where the market is, I know we've said this the last couple of weeks, but there is a big opportunity for buyers right now to get in while the market is dipped, you could say. So
that's a great segue. I think that's a great segue into to Greg. I know you've got some stats for us.
Got some stats.
So let's great segue, Paul. Great segue.
Here.
Thank you.
Okay, so I rocked Stittsville this week. Stittsville. I was like, let's get into the Stits. Very interesting. As usual, the statistics are very interesting. So, for detached homes in Stittsville right now, there's 34 active, averaging 79 days on market at an average list price of $1,002,000. So $1,002,000. Now, followed by 4 conditionally sold, averaging 81 days on market at an average sales price of conditionally sold price, at $882,000. Now, sold in the last 4 weeks, we have 15 averaging 70 days on market at an average price of $791,000. So you've got $1 million to $882,000 to $791,000. And in 2022, at the same time, there was 19 homes sold, averaging 8 days on market at $972,000. So Jeez. The sold is down. That's almost 200,000, based on, obviously there's little elements in there that'll skew that a bit, but that's the average right now. That's pretty wild. So when we get into towns, I mean, this is kind of weird, and I'll explain why. So there's 17 active, averaging 60 days on market at an average list price of $636,000. There's 1 conditionally sold that's listed at $750,000. Now, I took a look at this property and it's not $750,000. So I'm really anxious to see what this sells for, because I don't understand why it's listed at $750,000 and how it's conditionally sold at that price. Just doesn't make sense to me. But I just wanted to put it out there because these are the real numbers. I'm not trying to hide anything. Not hiding anything from you, people. People interested in Stittsville. So we've had 8 sold in the last 4 weeks, 41 days on market, average price $598,000. 2022 at the same time, 19 homes sold, 8 days on market, averaging $721,000. Again, so that's down just over, that's $120,000 decrease in average sales price. Dips, bro. Condos, 7 active, 80 days on market, same as the detached homes, $520K average price. Conditionally sold 1, 6 days on market at $600K. Again, and that's actually, I want to say it's condos. It's all across the map. So that could be a condo town, condo apartment, whatever. So this one in particular was actually a condo semi bungalow that they have out there. So 0 sold in the last 4 weeks. And then we have 3 sold in 2022, averaging 5 days on market, $510,000. So the price 2022 to the current active is basically the same as last year, which we've been seeing repeatedly. Condos have kind of stayed pretty close to the same, if not increased. Rentals, 31 active rentals, 36 days on market, $2,560 is the average price. 0 conditional, 16 rented, 38 days on market, $2,340 is the average price of properties rented in the last 4 weeks in Stittsville, and rented in 2022. The same number, 16 were rented, 38 days on market, and $2,340. It's the same thing. I don't get it, but I double checked that. It's the same thing. So the price is exactly the same as last year if you're renting in Stittsville. Average. Intriguing.
That's very interesting.
I kind of, that's wild.
I think that's if there's a number of individual investors or any for those rentals in Stittsville that purchased 2022, I would imagine they're highly underwater, and if rents have not changed, and I could see there being more property coming on the market in that area, then from those investors, I would think.
Potentially, yes. And, getting out of the statistics here a bit, I'll give you an interesting stat. I personally, me, team, whatever, 3 multiple offers in the last 4 days. So, it's happening more. People are getting more aggressive. We had to do one where we lost, and then we went in on the backup, and we only gave them basically in real time, because it went in late, 6 hours. We're like, you need to get back to us in 6 hours. We knew they had showings coming up. We're like, we're not messing around here. So if you're just keep it in your head, if you're a buyer and you're working with your agent, that it's happening, and be prepared for it. There was just weird situations. Like, we have these cash buyers too, and they're like, is this going to be beneficial to an offer? And we're like, well, no, not really. Like, we haven't seen a reason to use cash as as leverage in an offer lately, because it's not crazy multiple offers going on. But in this scenario, we're like, yeah, by the way, we have a cash buyer, just tell the seller that they don't need financing, it's cash, which is crazy that they asked us about it. And we're like, I don't know if you're going to need to use that. And then all of a sudden, here we are. So make sure that if you're buying, make sure that you and your agent go over everything multiple times, so that you're fully prepared for any scenario, because I'm seeing all these scenarios. They're all totally different, but there's elements of last year coming in.
Yeah, I feel like right now it's either multiple offers or no offers. It's kind of what you're saying about, if the home is primed, ready, turnkey, then it seems those are all getting multiple offers. I had a client lose a multiple offer this week too. And then there's other properties that are just sitting vacant, or just no movement. Maybe some showings, but not the same chaos. So I don't know if that's a pricing issue, if it's just the quality of the product.
It's just timing, man. Like, there's two that I know. There's one that we were involved in. It had been it's been on the market for almost, I think, 4 months. And they had a couple of offers that fell through, one for financing, one for inspection, probably just cold feet. And then no offers for 30 days. We offer on it, they get another offer. You know what I mean? And then there's things like that happening. And the house it's not great, but it was vacant. It was one of the vacant ones.
Yeah.
So, man, it's wild out there. Just be prepared. You can't have enough conversations, and you can't ask enough questions. I'm actually working on something with Luca right now, where we're going to be, we're taking every conversation that we're having now with clients, and we're making very specific notes on questions that they're asking, and how the conversation's going. And we're going to make we're going to do a video series about, which will be useful for agents, and it'll be useful for buyers and sellers as well. Just things to be aware of. Because I think it's important that everybody has that information, and I don't think that I think it should be available to everybody. There needs to be more of that out there, right? Because it is very stressful, and if you are not representing your client properly, it can backfire. So it's beneficial for agents, and it's beneficial for clients as well.
Oh, that's great. I looking forward to seeing that. I think on that though, I think we've touched on a lot of our. I'm trying to look at the list of articles. I think we've touched on everything. Paul, I know you're in a commute, so I doubt you have any mood boosts for us.
No, I just walked in the door and I have some boosts.
Oh, look at that! How timely.
Yeah. It was a slow morning. It was a slower morning than usual. Okay, let's see here. I got to see which ones are actually good. Okay, here we go. I got three. You guys ready?
Ready.
Number one. Oof. Why do nurses like red crayons?
Why?
Because sometimes they have to draw blood.
Oh, man.
I knew what was coming
Dave
based
wiping
on
his face in disgust.
I knew what was coming based on just your reply, like right before reading it. The oof.
Cold as ice. Number 2, when the smog lifts in Los Angeles, what happens? UCLA. No?
I mean,
Yeah.
yeah.
All right, number 3. What do cats eat for breakfast? Mice Krispies.
Mm-hmm.
Good old Mice Krispies.
Yeah, tasty.
2 days left. 1 day, I guess, now to vote for Toe Rep for Podcast of the Year, Faces Magazine. Voting ends on the 15th, so make sure to slide in there, get a vote in, and vote for all the other great business owners in our wonderful capital city.
Don't vote based on those last mood boosts.
Yeah, no, you're not voting on the mood boost. It's the entirety of the content. And if you haven't already, subscribe to us on YouTube. We're pushing 1,000, gents. I think we're about 40 away. So if you're listening, slide over to YouTube, give us a sub.
Yeah. Dip over to YouTube.
Yeah, get dipped. And if you haven't already, leave us a comment, review us, share, and write a question. We'll answer it.
And you know what? I think we should say this at the beginning of the next show, because I don't know how many people have already tuned out, but I'm very grateful for all of the business that has come from viewers of this show that are watching us and actually trust us to do business with them. Because I look at us some days and I'm like, who in the heck would want to work with these guys? These guys are crazy. So I'm super grateful for it. I had some more calls last week with other viewers, and they were just like the best people and so down to earth, and I love it. I love it. Everybody that we've been working with through the show has been fantastic. I think you guys probably feel the same way too.
Yeah, no, I agree.
I'm always still amazed that people listen to us ramble. So
I agree, and it seems like, I guess after years of listening, there's a certain understanding built. Like, I feel like when I talk to people, they're like, "Oh yeah, we feel like we know you." It's like, yeah. I guess after hours and hours of conversation, there's only so much you can hide, you know. So they see us at our best, they see us at our worst.
Exactly. Transparency.
Yeah,
transparency.
Awesome show. I think we got a lot covered today. We went heavy on the headlines, but I think that's what we needed.
All right, let's end on that one.
Going to hell.
All right, gentlemen. Well, we'll see you next week.
Deuces.
All right.
Bye.
Thanks for tuning in, everyone. We hope you enjoyed today's episode. Please remember to like, share, comment, and subscribe, because we'd really like that.